record it. There we go. So welcome to the Zoom networking meeting at the end of the second virtual gold conference. I hope everybody got a lot of information and a lot of, I guess, interesting information today. I'd like to thank all of our speakers, our presenters that gave you guys value. Now, what I would suggest is rather than me unmuting everybody and it becomes like a chaotic school ground, if you'd like to ask a question, there is a chat box in the lower screen. If you just put your question into the chat box, we will endeavour to ask that of our speakers. All of our speakers are unmuted. So if you could just, if you've got a question, just pop it in there. If you want to ask a question, I will try and unmute you, but with the number of people that we've got coming into the room, Jeremy Samuel, if you could unmute yourself, that would be great. So with the amount of people coming into the room, it is quite difficult. So I am going to open it up, Gunnar. I'm going to open it up to the floor. If you'd like to ask a question, please put it into the chat box. If not, I will start asking questions. Nothing yet, so I'm going to start with you, Nicholas Rappel. Nicholas, you are the Group General Manager for ABC Bullion. Could you just give us a quick, brief overview of what's happened with the gold price today, since this is a virtual gold conference? Be good to hear your views on the price. A lot of people wondering what's going on with the price. And also I have a question here, which is to ABC Bullion, so that's very handy. Does ABC Bullion have a storage vault in Brisbane or is it only in Sydney? So you can answer both those.
Let's deal with that question first. It's Sydney. But interested to note the questioner's interest in Brisbane, so I'll raise that internally. You asked about the gold price, Kerry. Firstly, thanks very much for having me at the conference. Look, gold has obviously had a pretty tough week, and the main drivers for that has been the vaccine news, really, because if you look at what's happening with the other drivers in gold, the dollar's been pretty weak. It's holding on to very key support, but nonetheless, it's at the bottom of the range. And if you look at real interest rates, they've been low and they haven't increased or anything. So it's really all about asset markets looking forward to Q1 and Q2 and having a fairly optimistic take. Saying that, that's, if you like, the driver for where we're at now. Is where we're at now an important level, or is it something that's you could expect after making, you know, really solid performance through March to August? Yeah, it absolutely is. We're just around about the 38.38 Fibonacci retracement of the huge move from March to August of this year. That's a really natural area for the gold price to kind of roll back to after such a big, you know, such a strong rally. The other thing is, technically, we're at just bounced off the 200-day moving average, and we're also just near the weekly, just around about the weekly Bollinger Band. So where gold has gone to is kind of like a whole sequence of fairly natural support levels. It does look pretty horrible if you bought gold a week ago. But I think this is, you know, that's you know, that happens. But certainly the main drivers of the bull market that we've seen are intact. And what has happened so far isn't, you know, it's part of, I would say, a fairly natural cycle in the market. I don't think it's something that seriously damages that bull case. And I would expect if these levels hold, then I would look for you know, fairly quick sort of short-term rally back to the recent resistances around about 1880, 1900.
Okay.
Sorry, go on.
Go ahead.
I was just going to say, if you look forward into 2021, I'm just going to say very quickly, I think there are three things you have to watch out for. The dollar index is right at a critical support. There's every suggestion it should break through that support and head lower next year. But the support's been really strong this year, so it's kind of hung in there. That should be good for gold. Secondly, we probably are more likely to have a little bit of inflation next year. And I think central banks will be quite happy to let inflation run, because inflation is better for us right now than deflation in such a heavily indebted world. So I think that, real interest rates will decline. That's also good for gold. The last thing I would say is that this vaccine news is great psychologically, but most people looking to say the first half of next year for, let's say, America, which we have to take as the world's biggest economy, the first half of next year doesn't look that great for the States. No one's expecting it to rebound heavily. So it might be the euphoria you're seeing at the moment might have a bit of a reset after Christmas and in the new year.
That's great. Thank you very much for that. I've got another question here. It's really either for Jordan or for Nick. It's from Ian Brazil. Under what circumstances could another body, for example, the government, seize stored precious metals in a vault? So could the government turn around? You've got your precious metals stored away outside the banking system in a vault. Could the government potentially come and seize the gold? My view is no, but I'll defer that first up to Jordan. And Jordan, while I've got you there, does Perth Mint have a storage vault facility in Perth? I would suggest yes.
Yes, we do, Kerry, and you'd certainly like to think so. I can see Nick chuckling. I think he's probably quite happy for me to take this question. So as regards the potential for gold confiscation, is it possible? Of course. Is it probable? Absolutely not, especially in Australia, where we have such enormous gold reserves, both in the ground and being produced on a daily and weekly basis by the mining industry. If the government decided there was a reason that it needed to increase its gold reserves, there's no shortage of it to buy in the market. It's also worth pointing out that within the context of Australia's overall pool of wealth, superannuation system, etc., gold holdings by Australian residents are, that they barely scratch the surface of, sort of half of 1% if we're lucky. So I really see it as a completely improbable scenario that something like that would happen. Having said that, if somebody is really afraid of that, then the simple solution is to self-custody.
In the backyard, then?
It's absolutely not advice in any way, shape, or form. It's certainly not what I do. But ultimately, if somebody is of the belief that that's going to happen, then that really is your only solution, right? So as I say, it's certainly not advice. In our case, I'd rather keep it with the Perth Mint, where you benefit from the government guarantee and you've got the liquidity to be able to sell whenever you want to exceptionally easily. It's a lot cheaper and more efficient to trade that way, and I'd argue it's safer that way as well than storing at home. But yeah, just I suppose in fairness to the question, that is the solution if someone's that worried about it.
Looks like we're getting the doom and gloom questions at the moment, ladies and gentlemen. The next question that's come in is, if the stock market collapses, looking at the Great Depression and the GFC, all stocks, including gold stocks, collapsed in value, or will it be different this time? This is hard. I mean, what percentage could junior gold mining stocks and mid-tier gold stocks potentially collapse by, and how long would you estimate after the collapse till they start to rise again? How long's a piece of string? The junior stocks are the ones Doug loves. I'm assuming you mean Doug Casey. Why buy gold stocks in this market if it will inevitably collapse in value? Well, I don't think it's inevitable that it will collapse in value. There's a lot of different commentary against whether or not the market is overvalued and whether stocks will collapse. I will defer to any of our speakers that would like to take this one on. And there is a deathly silence. So
okay, I'll
thank you, Richard.
Well, I'm putting my stockbroker's hat on, and you'd expect me to say this, but there's nothing goes up or down in a straight line. I think I said that this morning in the in the interview, and it's and buy and hold isn't a strategy that works well for such cyclical and volatile investments as metals or metal producers or explorers. So what we're seeing here is just another opportunity to to load up at prices that were 20, 30, 40% discount. I must admit I was buying Northern Star today with my ears pinned back below $13. It's just a tremendous opportunity. The big drivers. I mean, it was great to hear the Nicholas talking about the charting formations that are developing there, but because then I'm looking across at the fundamentals, where you've got this massive money creation, this massive amount of debt that's appeared virtually from nowhere, and you get a guy like Biden. If he gets in and if he gets control of the Senate, then you're not just looking at maybe a $1 trillion stimulus package. Might be $2 or might be $3 trillion. I mean, money's almost become meaningless to the extent that you need something like gold. That is like a rock. Silly. I didn't mean it like that, but it's sitting. It's like a firm foundation when we've got these printing presses running at warp factor 5. There's a thing you can rely on. I mean, for thousands of years, gold has been a form of monetary exchange. Hey, it's back there again.
Yeah, I think that's a very good overview. Did you want to say something there? Okay. Next one is what country is safe for USA or Australia when big collapse comes? Well, big collapse, as Richard said, it may not come given all the money printing that's going on. You might see that real assets, and I include gold and property in that, real assets could continue to rise, and you may not see a collapse in the stock market at all. It could continue to increase in value because of all the liquidity that's being put into the system by governments globally. And I can't see that going away anytime soon. And as Richard just said, with Biden looking like more and more likely to be in the top job over there, he's already said that as far as he's concerned, there's a lot of cash to be splashed. Would you agree with that, Richard?
Yes, indeed, and you even see governments all around the world. Look, last night the UK government unveiled their estimate of their budget deficit and the blowout in their debt. And I'm based in Melbourne. We had our budget earlier, the Victorian budget earlier in the week, where we're talking about debt perhaps going to $150 billion when the state was virtually debt-free not that long ago. These numbers fly out of the politicians' mouths so effortlessly that really it suggests a carefree nature to the exchanges of value. And it must put more upward, downward pressure, I should say, on paper money and hard assets, where gold's number one for me, and silver, because I know there's some silver producers here, are a very good opportunity.
And speaking on that, Richard, I'm going to go down to a question because it kind of I think this is one you can. It said. From Trish, she says at the last conference, there was a presentation by Evolution. She's lost considerably on that stock since then. Any advice as to future actions on this stock? Yes. Well, actually, I can't give you financial advice. I'm going to pass over to Richard, who also can't give you financial advice, but we have an opinion.
Yeah, that's right. I mean, I mean, shares go up and down. I'd find extraordinary if you just go. I'm looking at an alternative screen here at a chart on evolution, I thought, how could you have lost money on evolution? You'd have to be, you'd have to try fairly hard to have done that. In fact, I was buying evolution today at around $6 for some accounts. Oh yes, I see what you mean. It's it's only down $1 or two. It's not the end of the world. I wouldn't have thought for a company that's so well managed, has such great long-term assets, and has got a very, very good board. I mean, these are the key things. If you believe in gold being an ongoing store of wealth, then the people that can find it, dig it up, and sell it are going to be of value, probably better than other companies listed on the exchange.
And yeah, and I think that's good advice. And also, Trish, I think what you've got to look at, and we've always said this, you've got to look at the fact that who's running the company, who's behind that company that you've invested in. And I would hesitate, but I think that Evolution is a very well-run company. And as Richard said, it will go up and down. If you're looking for it to go up in a straight line, it never does. If you're looking to make money in the short term, then trading. I don't trade. I tend to buy and hold. Too much talking today. But I do think that if you've lost considerably, it's a matter of just hanging in now, because I don't see Evolution. It's not going to go away, and I think it will only strengthen over time. But these things do go up and down. Obviously, the slight weakness in the gold price has possibly had a little bit of an impact there. Would you say, Richard?
Oh, definitely. Yeah, and that is the beauty of speculating in gold shares, because it's not investment; it's speculation. Because the gold shares are leveraged to the gold price. Sometimes, in a really extreme bull market and bear market, it's like 3 to 1. You get a 1% rise in the gold price, you get a 3 or 4% rise in the share price. That's because of the flow through effect of having a fixed cost operation, where your costs of mining are fixed, but your revenue is volatile. In fact, in a rising gold market, you do better out of the lesser quality companies, because the flow through to the cash flow line is that much better if you're a high cost producer.
Just a couple of comments from me, Kerry, if you'd like, on Evolution. It is one of our lowest cost producing of the larger gold companies in Australia. Their all-in sustainable costs were, I think, third lowest of all of the gold producers on the ASX for the last quarter. They do have some great assets in Carl and Ernest Henry. I think you could expect them maybe to sell a couple of the smaller Queensland mines that they have, such as Mount Carlton. And I would think that they would look for another quality mine around the world that is a low-cost producer. And look, we have a number of these emerging right at home here in Western Australia. So there's a few of those that they could look to move into in the next year or so. So that's my take on Evolution. I think it's a good story. Like Richard, you'd have had to got into it at the wrong time to have lost on it.
Thanks, Rob. Appreciate that. And also, the companies that you saw today, there's some, we liked them, didn't we, Rob?
Yeah, absolutely. We like them all.
Love them. John Smith says, as younger generations who may prefer today to hedge with cryptos rather than gold, age and move into policy roles and into central banks, will gold lose its luster as the ultimate and time-proven store of wealth? Can somebody speak to the generational change as these people mature and gain influence? Gold lose, not good. Not quite sure what you meant by that, John, but I guess that really is speaking to there is a lot of liquidity. There's a lot of money. Obviously, the Bitcoin price has been roaring along in the last little while, but there's a great book that was written by James Dines, and it's called Mass Psychology. If you want to understand sometimes how markets work, I suggest, and I always telling people to read, stop watching Netflix and get yourself educated. Read Mass Psychology. It will explain a little bit about how most people will buy at the top and sell at the bottom.
Kerry, can I just make a couple of comments there?
Please do.
I think, firstly, the time-proven element is a really important one with gold, as opposed to Bitcoin, if you're setting them up in comparison. I think the other thing that's really important is that gold is traded worldwide on some of the most liquid exchanges in the planet, and Bitcoin isn't. And so there's that element that you have to bear in mind, is that where are you trading? What are you trading on? What are the governance issues around that? Bitcoin definitely has, there's no denying its appeal, but I think you have to look at the market infrastructure and compare those as well as the longevity of gold compared with crypto. That's my 5 cents worth.
I'd like to call on any of the speakers today from the mining side of things. Does the price of gold, maybe Matt Gill, I'm gonna bring you in on this one. Matt, what are your thoughts? Does the price of gold impact the mining companies at the moment, or at these prices it's easy for you guys to continue to create wealth for shareholders?
So thanks, Kerry. Look, I'll answer that from the position that YROC's at, which is an explorer. So rather than the other end of the spectrum, which is the evolutions of the world that are producing. So at the explorer end, certainly we are cyclical to the sentiment of the commodity at the time, and we all know.
I'm working on it.
We all know, whether it was graphite or graphene or cobalt or lithium, that there's often a flavour of the month, and speculative money will run to the explorers there, and often far in advance of the number that will ultimately be there in the longer term. And I think I heard that there are only 3 cobalt plays on the market currently, if we remember back some time. So certainly as an explorer, there's a wave that you can catch. What I like in particular about gold is that the waves are regular. Now, I'm not a surfer, so I won't keep going with that analogy, but I think of all of the commodities, gold tends to be there over time. It's either risk on, risk off, jewelry. It's got a huge history. And I think, to your point in particular, a good example is the gold run up mid-year saw a lot of money being raised for gold exploration, and finally there was some love to explorers in general, which there hadn't been for a few years. And we saw that with our project in Alaska. The assay labs there are banked up to the hilt because of that gold price rise, the market interest, people capitalised on that, raised money, White Rock included, then got on the ground and then put the drill bit to work. So yeah, we are exposed to sentiment, but I think gold tends to slice through a lot of the more frothy stuff, would be my observation.
Yeah, good observation. Appreciate that. Thanks, Matt. Any of our other miners want to make a comment?
If no one else, I will. Kerry, gold is a brilliant commodity for a small company to explore for, because it's easy to explore. There's lots of opportunities out there. The beauty about it is you can get it into production easy. The process routes are proven. If you're in WA, there's probably a gold processing plant just down the road, so you don't necessarily have to build your own. And then you just ship it off to the bullion houses and they buy it. Contrast that to the battery minerals, the lithiums, the graphites, the other minerals like that, the technology minerals. They've been running around for the last couple of years trying to find a use for their product. You don't have to do that with gold. It's proven. You pop it in a bag and send it off to the mint or wherever. Pretty easy, and that's why there's so much support for it.
Thank you, Rob. Jeremy, are you seeing you found a digital metal exchange? I think you're on mute, but we'll unmute you.
Sorry, Kerry.
That's all right. So you found a digital metal exchange. Are you finding that there is more sentiment going in towards the crypto and against gold? Because you've been in both. You've worked in the gold industry. You're now getting some digital funding up and running. What's your take on sentiment at the moment?
Look, at the moment, obviously Bitcoin's very hot, and maybe it's going for the 10x rise that all the wonks said it would after the doubling. Who knows? There's certainly a lot of really interesting activity going on in Bitcoin in particular, with institutions creating ETFs and even things like PayPal starting to accept Bitcoin, and so there's certainly some market-driven factors driving it up as well, plus a lot of uncertainty. So yeah, look, we're certainly seeing very strong interest in Bitcoin, but I think a lot of the comments that have been made during the day, and some of the things that for example Bron was saying earlier about it's a bit generational, and the boomers and what have you, and also cultural. There are cultures that just love gold, and some of those same cultures have taken a real shine to Bitcoin. There's no doubt, but at the end of the day, they love gold, and gold is a great story at the moment. And I think when you hear people like Jim Rickards talking, and even Harry Dent, and Harry's not as bullish on gold as some others, but because he thinks it's also a bubble. But a lot of the people who are making very rational and sound arguments about the irrationality of the current situation are obviously very bullish in gold, and a lot of those guys aren't as bullish in Bitcoin, and I understand why, but we kind of take a view that they're really great foils to each other, and that's certainly the sentiment we're seeing. I think a lot of considered investors are taking strong positions in both, but I would say the flow at the moment, if anything, would certainly be from gold to Bitcoin, especially with the speculative crowd.
Absolutely, especially with the speculative crowd. And all it takes is for Bitcoin to drop by 2,000, and they'll be all rushing back into gold. It's quite interesting, isn't it?
Well, that's okay. I mean, listen, as an exchange, we just love volatility. Volatility equals volume. So that's we don't care which way it's going.
Well, my mining guys here, they like it when it's going up, their share price, that is.
Of course, and gold price backed by share price, vice versa. So yeah, of course the producers, because they get to pay in funny money and get paid, if you like, for their efforts in gold. That's a pretty good outcome.
Yeah, and I still believe that the funny money is going to be printed into oblivion. But that's why I love gold, and I love the gold market. Now, I'm going to put this out there because I know that there's a lot of people here, and some people will be wanting to ask a question, but they're thinking, is that a dumb question? Let me tell you, I asked all the dumb questions. When I first started in this business, I asked all the dumb questions. So there are no silly questions. It's really about learning, and this is your chance to ask each of the presenters that are on here today your questions about what's going on. Rob, I'm going to come back to you because there's not another question up there. Rob, can you just remind us, has the investment into the gold sector increased in 2020, remained the same, or decreased? What's your take on what's going on at the moment?
I think it's definitely increased. Perhaps it's scaled back a little bit in the last month, but it's definitely increased, and both in interest and in buying. Obviously, that's reflected by the gold price going up to a record level there for a while. Obviously, and I'm not a technical expert on gold, but certainly COVID and the US-China relationships and the US election have all been probably the main drivers, and that's probably why, with the talk in the last month of a vaccine and Biden moving now, it looks like comfortably into the White House, we are seeing a comeback in the gold price. So, but we'll always see that volatility. There's more people in the world all the time, and anytime we get any sort of global tensions, we're going to see the gold price go up. I think there's been a lot more interest in the market, and hence in gold, particularly from self-funded retirees in Australia. They're not making any money at the bank with interest. They're looking for something else. And I think gold is something that they understand and that they've got into and have invested in. So, yeah, I think the interest has definitely been there. Capital raising has been absolutely fantastic, as Matt said, in the last quarter. It's the best capital raising quarter for a well, since we've been taking records. And the companies have never been more cashed up on average for exploration. And also, it's been capped off with some great discoveries in the last year or so that have been made in most states of Australia. Sadly, up here in Queensland, we haven't come up with one, but most states have had some really good gold or gold copper discoveries, and that's also helped tremendously. So, yeah, the outlook is very strong from the exploration stage. There's a lot of money out there. There's a lot of drilling going to be done, and there's a lot of things going to be found as people look undercover further and drill deeper, and that's where the trend is. Some great discoveries being found, you know, even down at 1,000 meters. Not going to be uncommon.
Yeah,
Thanks, Rob.
If I could jump in there as well, you know, I think that the discoveries we've seen, and in particular, you know, De Grey's Hemi, Alkane's discovery in New South Wales there, what's been happening in Victoria, that was a result of capital that was probably raised in 3 or 4 years ago. You know, in Victoria, just raised, you know, $200 million of new capital. You could have owned the whole industry for that price. But what we'll see is that as that gets ploughed into the ground, and it's, you know, from an investment point of view, it's actually very encouraging to see so much of the capital raised actually being applied through the drill bit. The fruits of that, because it's a numbers game, exploration. You know, the more you spend, the more you drill. The more you drill, the more you find. And you know, and I think stuff like what Andrew McElwain's doing over there in South Australia, putting new holes into an old deposit, and lo and behold, there's more silver there. It makes it more likely that it'll be a mine, even though the silver price is probably has been higher over the last 20 years. I don't know if Andrew's got a comment on that about the you know the exploration that's going on around South Australia and Victoria as well.
Andrew?
Oh, look, always got something to say, and I apologise for muting myself. I had to settle my carbon neutral doorbell down, which otherwise is known as 2 black dogs. But look, thanks, Richard, for the prompt on silver, and look, echoing what Matt said, the last 6 months has been kind to us. The silver price, you know, tracks the gold price, except there was a departure there for a little while, and it provided us all the opportunity to raise some money, and we're putting that into the ground in South Australia. But a project that 2 years ago was really going to be mothballed, something that, as long as we keep seeing something better than $30 Australian per ounce in the silver market, then this project will keep moving forward. But, again, you know, the issue of the volatility of price and reflected in stock, you know, we see that every day in our investigator price, where we're a great proxy for silver investment.
Andrew Tunks, sitting there quietly, I've never heard you so quiet.
I'm learning something, Kerry. I'm the classic geo who doesn't know much about the market, so it's very good for me to listen to people who are far more knowledgeable than me on the markets and the way commodities move. You know, I'm still a rocks guy.
Well, you're a rocks guy, and you're putting the drill bit into the ground at the moment, aren't you? Have you found that it's a little bit easier to do capital raisings and, you know, meteoric resources going pretty well at the moment?
We got a capital raise away late last year, and we haven't needed to do one this year at this stage, despite the fact that there's been, you know, opportunity. We did a small one on the back of an acquisition, but it was really just to pay for the acquisition. We I suppose, there's always an interesting decision point about when do you raise money, and if you've got money, and I'm certainly not shy about raising money. I mean, I think you should always raise money if you can, but our exploration budgets for this year were fully funded, so we have elected not to raise, and we felt very bullish on our projects, both in Brazil and in Australia, and rightfully so. I mean, our results this year in terms of quality intercepts are as good as anyone's. I'm not suggesting we've got the scale of, a De Grey or someone, but we've drilled amazingly high grade gold in Brazil, and we've drilled amazingly thick, consistent intercepts in WA, hundreds of gram meters in both places. So, so we've elected at this stage not to raise any money, but it's something that's always on your mind. But no, we also believe in our exploration projects, and if you do, then it becomes an interesting dilemma as to when is the right time.
It's always about trying to figure out the right time, isn't it? Now, speaking of right time, this is possibly what Jodie Stanton, I saw that you've entered the room, but I can't see you at the moment. If you could unmute yourself, that would be good. This is really for the bullion guys. At the start of the lockdown, purchases of physical bullion, actually, Jordan, it's probably one for you. At the start of the lockdown, purchase of physical bullion from the Perth Mint required almost a 2-week wait. Is there a shortage on the supply of physical gold? Should there be another rush back to gold, or was that more a logistical issue arising from the logistics, arising from restrictions of the lockdown?
The very short and succinct answer is it's the latter. So, you had the almost the perfect sort of crossover of when COVID hit, you actually saw a really significant increase in demand for small bars and coins from investors in Australia and in other parts of the Western world. At the same time, you had refineries and mints, again, all around the world. There were some pretty famous stories about what was happening in Switzerland that had to, just from an op health and safety point of view, reassess how they could actually operate safely and keep staff and the like, safe from COVID. So both of those reasons essentially combined to have, examples where for certain specific products, not like every product in the range, you could have a delay relative to how quickly you would normally expect to be able to get product. It absolutely has nothing to do with there being a shortage of gold or silver.
Yeah, it's funny how the media can pick stuff up like that and put the fear into everybody, because I've got another one here saying, what's the most likely predicted movement of silver bullion? How long?
Parallels gold, Kerry.
Sorry?
Parallels gold.
Continue. What do you mean, parallels gold?
Sorry. When gold goes up, silver tends to follow, and when it comes down, silver comes down about the same time.
Right. Okay. Cool.
That's my experience anyway.
Yeah.
Kerry, I might contribute, and Andrew, I'm sure, will have a view. White Rock's exposed to silver across our two projects. We've got, between the two JORC resources, about 70 million ounces of silver, so the equivalent of about 1 million ounces of gold. And while I'm a bit like Andrew, I'm a mining engineer, silver is, so Rob is generally right, but my comment would be when silver goes up, it goes up far better and quicker than gold.
Yeah.
So there is a great opportunity on the up, but the flip side is there, and it is known as the devil's metal, is that when gold goes down, silver, when silver goes down, it can go down quicker. So it is more volatile, but good on the upside, and obviously not so good on the downside. And maybe Andrew's got a view, and maybe Rob has as well, because silver is quite an interesting play.
But before we pass to Andrew and to Rob, it's a question for you, Matt. If the silver price does come down, does that affect your project?
No. So our feasibility study for our New South Wales asset is done at, at $20 Aussie. So that's whatever that is, $15 US, and it's currently over 20. And predictions are it'll go over 30.
Yep. Looks like
And it's been as high as 40 US. So certainly you want to make sure, to your point, you want to make sure there is probably a bigger margin in your silver play than otherwise you might need in, say, a gold play for that volatility. But you can certainly make a lot of money on that rising tide for sure.
Yeah, and it's the leverage in the mining companies that people, and that's what I say to people, you know, you can buy the physical, but when you're looking at mining companies and you understand that the people and the projects are really key. And of course, I've got the best people on this call, clearly, but that's, I like the leverage. Andrew, did you want to come in on the silver comments?
Look, and without getting, I suppose, too technical, there is a gold-silver ratio that that the buffs follow. Historically, sat at around about 50, where you needed 50 ounces of silver to buy an equivalent ounce of gold. Over history, that's been as low as 30 and even more recently as high as 126. So as Matt says, when it goes up quicker than gold, and certainly on the flip side, it comes down quicker than gold. Look, I've got some investors, and in fact, you know, quite significant investors in Investigator that have a view, and they won't tell me, but they said, look, it's going to have a number with two zeros after it at some stage. Now, what drives that theory? They go back to 1947 with the formation of the Silver Users Association, how the current ETFs aren't supported by physical silver. There's plenty of algorithms, I'm sure, that they generate, but those that think silver is going to move think it's going to move far harder and faster than anyone would ever anticipate. Hopefully we're in the box seat.
Let's hope so. I've heard the same thing. I've heard a lot of commentators talking about the the triple-digit silver price. Richard, have you heard anything along those lines? I mean, it's very hard to predict, ladies and gentlemen. It's very, very hard to predict these.
Well, I've heard a couple of things. Yeah, I heard a couple of things. I'm a great fan of Eric Sprott's podcast. You know, my Saturday morning isn't complete without listening to that, to him being interviewed. He tells the story that there's a ratio, the gold-silver ratio is one thing, but there's also a ratio of the abundance of gold and the abundance of silver in the Earth's crust, and it's something like about 7 to 1 or 15 to 1. I can't remember which one it is, but whatever it is, it's a lot lower than the 80 times ratio it's trading at the moment, or the average, which I think is around about 60. But another story that these guys like to tell is you know, when gold's moving in America, and you know the bank customer goes into his bank to say, "Oh, I want to buy some gold?" And they said, "Well, look, it's $1,800 an ounce." "Oh, that's much. So I better not get any." And the bank teller would say to them, "Oh yeah, but look, silver is only you know, $25. Oh, I'll have some of that then." And so just that silly relationship of the nominal price there of $1,800 versus 25. Oh yeah, I'll have some of that $25 stuff, you know. Yeah.
Thanks, Richard. Yep.
If I can, it wasn't that long ago, and I'm trying to think exactly, probably 10 or 15 years ago, Pierre Lassonde was the keynote speaker at Diggers and Dealers. And he was asked that, Pierre, you know, the founder of Franco, and he was asked the perennial question, well, what's your forecast for the gold price next year? And he said, look, I can't tell you. All I can tell you is that it'll have 3 zeros after it. I just can't tell you the number in front. Now, gold at that stage was $700 or $800 an ounce. I think half the audience thought somebody dropped something in his drink the night before at the exchange. But, you know, we have a look now, we're talking about 2,000. So anything's possible.
Yep.
And actually, if you look at the gold price over the last 20 years, I've got this great chart. I can't flick it up straight away. But if you look at the gold and the silver price, and Jordan, you might want to jump in a minute, but if you look at it over a longer period of 20 years, it has held up its own against what I call the funny money. So I was recently talking with E.B. Tucker, who said that, you know, if you had bought an ounce of gold back, you know, 100 years ago, it would have cost you $1. that same ounce of gold today is going to cost you $1,800. So it's a matter of having a look at it over a period of time. Jordan, you look like you're leaning forward, ready to chat.
Only because you invited me, Kerry. Thank you. Yeah, look, I think you sort of answered your own question, as it were, or in the statement that you made. Like, you can always find a way to make any asset class look good or bad, depending on when you measure the performance from and until. So, we're in a world now where, almost no one that's under the age of, I suppose, 55, 60 can remember interest rates moving meaningfully up and bonds being in anything other than a bull market. But, there was a 40, 50-year period leading into the 80s where bonds didn't make any money. So if you were trying to sell them to people in the late 1970s, no one would have been interested. Equities didn't make any money for 25 years from basically the start of the Great Depression through to the start of the mid 1950s. So yeah, you can make any asset class look good or bad depending on when you draw the starting and end line to. As for gold, it's not just the last 20 years. If you go all the way back to 1971 and just take the sort of average return, it comes to around 9 or 10%, depending on what currency you're talking about. Obviously, we all know before that it was fixed in some way, shape, or form. So, from that perspective, that return is pretty extraordinary when you think you're buying. Nick touched on it before. It's an asset that's incredibly liquid and traded globally. It's an asset that, when it's held in physical form, has zero counterparty risk. So the return of gold over the entire time period in which the price has been, for want of a better term, free floating, has more than stacked up.
Thank you. I've got one from Andre, who says, to everybody, following the current pullback, what are the next most likely drivers to push the gold or silver price up from here? I added in the silver bit there, Andre.
Well, I think it's I think it's the when Biden says something firm about his stimulation policy, how much he's going to spend. Is it going to be 1 trillion? Is it going to be 2 trillion? Is it going to be 3 trillion? That money's got to be conjured up out of fresh air, and the only way to do that is to print more of it. And you cannot you can print money, but you can't print gold. And I think it's a game of relativities in this situation.
Did somebody else want to say something? Thanks, Richard. I heard about three.
Yeah, Kerry, I think the real driver, probably the most robust long-term driver for gold price behavior is real interest rates. So, what do we think is going to happen to real interest rates over the next year or so? The Fed is very likely to let any inflationary pressures that emerge. I'm not saying there will be big inflationary pressures, but there may be some, as there's a huge amount of huge fiscal boost and huge monetary boost that's been given to the economy in the last year, or in this year. That should play out probably during the course of next year. The Fed would probably, and most other central banks would probably let inflation ride a little bit. I suspect you'd get real interest rates staying very low, probably going even lower. That's your real driver for the gold price going higher in a sustainable way. Just wanted to say something else about silver, because I actually traded silver in the 90s through the early 2000s, and the price range, actually mid 2000s, and that covered a huge price range. I remember at one point trading it when it had a 3 handle, and people can't imagine it. We talked to producers that couldn't imagine it going above 5 or 6 or 7 bucks when it was down there. And of course, now that it's gone up to 30 plus or whatever, people could never imagine it going back there again. I think, I'm pretty sure it won't. If it does go significantly higher, what I would say, it probably wouldn't be there for very long. So if you had a hedging program in place, use it. On the basis that it's a volatile metal, and I think it can do amazing things, and it's an amazingly useful metal as well. But I don't think it's going to go to some of these numbers that have been talked about and then plateau there. It'll be there for a little while. Just as if it drops, it'll be there for a little while.
So it's a volatile metal that could go into the triple digits, but then again could come back a little bit.
I'm not saying triple digits, but I mean, you know, of course it can revisit anywhere that it has been lately.
And we've got a very good...
22, you'll see 35.
Say that again.
Look, if it stays above 22, 21 and a half, I think you're looking at 34 bucks, 35 bucks. But, you know, compared to some of the other views, that's a very tame forecast.
It is indeed.
Well, Nicholas, if I could just jump in there, I like what you're saying there about, especially about real interest rates, which of course are the nominal bond yields minus what they call inflation. My problem is that what we use as inflationary measures these days, and there's official data that gets delivered to us in the US every month or so, and it's just as it's less frequent here and often a lot later. But I mean, do you really believe that the number they serve up to us as CPI is actually the rate at which the prices, everyday prices that affect our lives, are actually moving? I just can't accept that.
No, I don't disagree with you. I think that that's been a long time criticism of CPI from a lot of people. I think that's a perfectly reasonable thing to say. I also think that another criticism is that, you know, those the index that gets used to make the CPI obviously have to change over time. So, you know, you'd hope that you were comparing like with like over a long time series, but even there, that's a criticism that does arise. And I think for most of us, you know, we look at the things we do spend money on, and we think, look at the things that we're really exposed to, and it doesn't feel like a low inflation world, even though the data tells us that we are looking at a low inflation world. Maybe when inflation does creep in, it'll become all the more obvious as a result. But I agree with your point, absolutely.
Right, so we're going to be finishing in a few minutes. So if anyone's got any questions, otherwise I am going to ask each of our speakers just to do a last comment, because first of all, to get these guys in a room, they're all very busy. They're running projects, businesses, and I really appreciate your time, guys. So thank you for joining us on this call today. I'm going to start at the top and go down and give you 1 minute just to make some final comments before we finish the call. Richard Morrow first, then Rob, then Jordan.
Thanks, Kerry. I'm delighted to say I'm on the top. But look, I would say I'm just impressed at the dedication and the talent and the way our professional explorers are out there working their projects, you know, working with communities. You know, it makes you very proud, I think, to be an investor in a lot of these companies. And good on you guys. Keep on doing it. We're right behind you.
Thank you, Richard. Rob Murdoch.
Yeah, well, I'd second what Richard had there. I mean, we do have in this country, in particular, outstanding professionals at all levels. The technology for exploration is getting better and better all the time. So the chances of finding something is growing. There's lots of cash. Every year we're seeing companies with more and more cash that are available. And so they've got the opportunity to drill and find new deposits, and technology's going ahead all the time. We live in a world that has an increasing population, and so while there's more people, there's going to be more tensions. More tensions, to me, in a very simple way, means a better gold price. So I think the outlook for the future for gold is fantastic, and it's a great industry to be in. And thanks, Kerry, for the way you promote it.
Thank you, Rob. Jordan Alicio.
Yeah, echo the comments already made about the health of the industry in Australia and how much opportunity there is in gold mining. Obviously, I work more on the physical side of things, but Obviously, that goes hand in hand with the mining industry that actually produces it in the first place. So I'd echo the sentiments regarding the opportunity for investment in the sector in the country. As regards the metal itself, I think that the sort of washout that we've seen over the last 3.5, 4 months is actually incredibly healthy. It was long overdue. There was a lot of froth that had built up in the market by August. None of the real big picture issues or reasons that you would want to own gold have actually, and silver for that matter, have gone away. So I think it's still an asset class that offers tremendous opportunity in the years ahead.
Thanks, Jordan. Richard. Sorry, not Richard. Sorry, Nick.
Yeah, I think, look, I think it's a question, thank you, Kerry, again. Look, I think it's a question of being patient because, as Jordan just said, the fundamental drivers are still positive. That's the story has not changed. But I think since we're seeing a significant pullback, choose your levels and be prepared to think that levels might go, I've said there's good support around here. If that breaks, step back and look at it. It's a good buying opportunity. Some of the very long-term supports are still, further below us. But the fundamental picture for gold has remained, the gold bull market remains very much intact.
Now on to my mining boys. Matt Gill, final comments to our audience.
So thanks, Kerry.
Apart from buy White Rock Minerals.
Well, that goes without saying, of course. Look, I think if I took a step back, I think commodity diversification is important. Backing one horse is sometimes, you can win, but you can lose. And so I think having a few strings in your bow, to the investor or the listener is often important. And also we didn't touch on it is the jurisdiction that your commodity is in. We can wax lyrically about gold, but I think there are some better places to have your gold project than others. So, there's a number of dimensions that I'd encourage the listener to think about, commodity and where. And to your point you made earlier, do your research, and you can never be educated enough, I think was to a point that Rob made. So that would be my comments to your listeners, Kerry. And, just thanks for the opportunity to do this. Although I must admit, I'd like to get in front of someone in real time and have a real beer, real coffee rather than Zoom. But well,
Matt, we'll be doing that at the end of next year. The gold conference will be back face to face, so you can come up to Sydney for that one.
Yeah, I'll look forward to it, Kerry. Thanks.
Andrew Tunks.
Oh, just quickly say that Meteoric have got 2 exceptional projects, one in Brazil, one in Australia. We've delivered consistently, fantastic drilling results for the last 2 years. We're getting to the stage where we believe that both projects will be ready to go to feasibility study in 2021. There's a bit of drilling to go on both before, but that'll be ongoing anyway, and it's an exciting time. So we're all for the gold price, and you should have a look at MEI. Thank you.
And where's that beer?
It's gone, but I'll give it a plug. Go the Tigers.
We're having a bit of fun with that before, weren't we, Taxi? Mr. Michael Wayne.
Well, I can't say much more apart from go the Tigers as well, but I did quickly change my background because, as Matt Gill said, if you want some diversification, I'm the only silver guy that's been talking about their silver project today at your conference, Kerry, and thank you very much for the opportunity to do so. The Paris Silver Project, highest grade silver project in Australia, big news flow. We've actually got the largest drilling program that's happening in 2020 in South Australia. You can see the picture behind me. It's a beautiful thing. There's no issues and no impediments to development of that project. So diversify yourself away and go and buy some Investigator.
Fantastic. Thank you, Andrew. Have I covered everybody? Is there? Oh, Jeremy Samuel, where are you?
I'm here, Kerry.
I nearly forgot you. That would have been terrible.
Gosh, I thought I was hard to forget, but it's been a long and terrific day. So, look, first of all, Kerry, kudos to you. What an amazing event again that you've managed to pull together, and you know, to be able to share a stage with the likes of Jim Rickards and Sprott and what have you is just fantastic. So thank you from the whole community for everything you do, and particularly for today. My takeaways are probably similar to a lot of the guys. We love exploration stage companies. We think they do an amazing job of work at very high risk, and they don't get a lot of love often from the banking sector and others. And you know, the genesis of DMX was actually thinking about how we can support the funding and development of those, you know, exploration stage mines into production in a much more mining focused and metals focused way. And that's why we're rolling out the exchange and the funding mechanism, and we look forward to supporting some fantastic Australian mining operations. We see a very, very strong future for gold. As I said before, we still think Bitcoin is going to play an enormously important role, and part of what we'll do is allow investors and traders to move in and out between Bitcoin and gold in a really seamless way. And we see both assets as really exciting places to be. So you know, to all you guys out there mining the dirt as opposed to mining the market, keep doing what you're doing, and come and talk to us about smarter ways of getting funded. And thanks again, Kerry, for everything.
Yeah, it's a very smart way that Digital Metal Exchange are doing funding. Because for me, as a shareholder of a number of companies, it's non-dilutionary. That's what I like about it. I am going to finish up now, guys. Is there anyone I've missed from our speakers that's sitting in there that I haven't seen? Speak now or forever hold your peace. All right, so my thanks to everybody that's on the call today. Just to all let you know, first of all, thanks to all the speakers, to our sponsor ABC Bullion, and to everyone that's had a listen. I hope you've learnt, because being educated and being resourceful is really, really important, especially in these very volatile and unusual times. Our next virtual gold conference will be on Thursday, the 4th of February, 2021. We are just over 4 weeks from Christmas. It's extraordinary how fast the year has gone. I hope you enjoyed today. If you've got some feedback, please make sure you send it to info@symposium.net.au. We welcome feedback, and make sure all of the presentations will be on the Gold and Alternative Investments YouTube channel. We will send an invite out to all of you to check those out. It will take us about a week. We have to do a little bit of work behind the scenes, and I'm not good with technology, so I have to rely on other people. Hope you enjoyed the day. My thanks to Sandy, who's been in the background supporting me from a technological point of standpoint. Thank you, Sandy, and everybody else. Have a fabulous Christmas. Stay safe, everybody. And here's to borders opening up and everybody having a wonderful Christmas. Thanks very much. Have a good night.
See you guys.
Okay, bye.
Thanks, Gary.